Before you apply for any credit card, loan, or line of credit in 2025, banks already know whether they're going to approve you. Yes, before you click apply, before you submit your name, and even before the system performs a credit check, your fate is decided. And in today's video, I'll show you the exact method credit analysts use to predict your approval with shocking accuracy. This is the same internal scoring system used by major banks, card issuers, and underwriting teams. And here's the crazy part. Most denials have nothing to do with your credit score. Banks look at secret factors you never see, and one of them predicts approval with over 92% accuracy. Stay with me until the end, because once you understand how this system works, you'll know exactly when to apply, what cards to choose, and how to avoid automatic denials forever. Let's begin. Topic 1. The hidden metric banks use before pulling your credit. Behavioral Approval Index, BAI. Most people think approvals depend on their credit score, but analysts start with something much more important. Your Behavioral Approval Index, an internal risk estimate banks calculate without accessing your report. This score uses factors like how often you apply for credit, how long you wait between applications, whether you carry balances, whether your profile shows desperation behavior, the average age of your last open account, the number of recent inquiries. Here's what you need to know. You can be denied instantly without a full review if your behavioral pattern matches high-risk profiles. In simple terms, if the system thinks you're applying out of desperation, or chasing approvals too frequently, or showing signs of financial stress, you're flagged before they even see your credit score. Most banks use AI models trained on millions of denied applicants, and these systems can detect risk patterns with shocking accuracy. But the next factor is even more important. Topic 2. The 5-point approval formula analysts use manually. Credit analysts don't just look at your score. They evaluate a 5-factor formula that predicts approval outcomes. 1. Credit age profile. Not your total age, but the age of your youngest account. If your newest card is under 90 days old, approval chances drop dramatically. 2. Utilization stress signals. Even if your total utilization is low, analysts look for spending spikes, limit max-outs, repeated near 100% usage, erratic monthly swings. These behaviors send red flags. 3. Inquiry velocity. Your total inquiries matter far less than your inquiry timing. If you have 3 inquiries in 30 days, your approval chances collapse. 4. Overall credit mix stability. Analysts check how balanced your profile is. 1 to 2 cards is unstable. 3 to 5 cards is stable. 7+ cards is high risk. It's not what most people think. 5. Debt to limit behavior. Banks don't look at debt, they look at behavioral patterns of debt expansion, meaning, do you request more credit when your utilization is high? Do you rely on increases to stay afloat? Do you open new cards when limits shrink? This gives analysts a psychological profile of how you use credit. The more stable and predictable your behavior, the higher your approval odds. But this next topic reveals something shocking, something banks never publicly admit. Topic 3. The shadow score banks use behind the scenes. Your internal bank score. Every bank runs its own internal scoring system, completely separate from Experian, Equifax, and TransUnion. It's called your internal risk score, or account behavior rating. And here's what makes it frightening. You cannot see it, you cannot dispute it, you cannot freeze it. It is built using your payment patterns, how early you pay, how often you revolve balances,
your deposit activity, if the bank also holds your accounts, your transaction behavior, and your card usage frequency, and your history with other products. This is why you can have a 750 credit score and still get denied because your internal score is low. Example, if you have an American Express card and you overpay early, use your card frequently, keep utilization low, never carry a balance, your internal Amex score becomes extremely strong, which allows approvals for cards others can't get, even people with higher credit scores. This internal score is one of the biggest secrets in underwriting. But there's another step analysts take that quickly predicts approval with brutal accuracy. Topic 4. The soft pull simulation trick analysts use. Before approving or denying you, most banks run a soft pull simulation. This does not appear on your report. What it does, it projects your risk over the next 12 months. It estimates whether you'll revolve a balance. It predicts whether you'll max out your limit. It simulates your credit score at different utilization levels and evaluates how likely you are to default. It generates 3 numbers: 12-month risk score, projected utilization behavior, and default probability. If any of these values fall outside the bank's acceptable range, you're denied automatically, even with a perfect credit score. This simulation is why people can be denied instantly before any human sees the application. But you can beat the system, and that's exactly what the next topic reveals. Topic 5. How to predict your approval in 2025 with 90% accuracy. Credit analysts use models, but you can simulate approval results yourself using the same signals. Here's how to know if you'll be approved. 1. No new accounts in the last 90 days. If you open something recently, treat it as an automatic denial window. 2. Total utilization must appear below 9%. Not paid, meaning before the statement closes. 3. Fewer than 2 inquiries in the last 90 days. Banks hate velocity. 4. At least 1 card older than 2 years. This stabilizes your risk profile. 5. No limits maxed out or near maxed, even if balance is later paid. 6. High internal score with your existing bank. Use your oldest card heavily for 60 days before applying. If you meet these conditions, your approval chances are extremely high, regardless of your FICO score. And here's what to do next. If you follow these rules, you'll know exactly which cards you'll be approved for before you apply. But here's the best part. In the next video, I'm revealing the top 7 hidden approval tiers every bank uses, including the exact score range that grants instant approvals, and the tier that gets you auto-denied even with great credit. If you want to stop applying blind, if you want to understand how lenders think, watch the next video now. Your approval power starts there.